So hi everyone, in this video you can see that we have a new candlestick pattern called the piercing line. This video is going to be explaining everything you need to know about this candlestick pattern called the piercing line. Okay, so let's dive in. So a piercing line is a bullish signal that occurs on a downtrend where after a long bearish candle, a bullish candle opens at a new low and then closes at least at a level at least halfway up the body of the previous bearish candle. Okay. So what we are saying is that in a clear downtrend, for example, we have a clear downtrend, we shall form a big bearish candle, and then a bullish candle which is coming up is going to start at a new low because this is a previous low. This is a bearish candle, so it closed low, so it's a previous low. When this bullish candle opens at a new low, instead of opening at the close of this bearish candle, it will come and at its close, it will close at least halfway of the body of that previous bearish candle. So that is what we call the piercing line. For example, the way you see it here, you have a bearish candle and then a bullish candle opens below the close of this bearish candle. So this bullish candle opens slightly lower, but at its close, when it is moving upwards, it is at least halfway of the body of this uh, previous bearish candle. So that is what we call the piercing line. Okay. So on this chart, we are going to be looking at the piercing line, and we shall be seeing its entry points and its exit points. So for example, because this candlestick pattern is rare, you can see that here we are coming from a downtrend. Okay. So you can see that here we are coming from a downtrend, and then here, right here, you can see that this is a bearish candle, and this bearish candle is followed up by a bullish candle which opened at the low where it closed, sorry, it opened lower than where this previous bearish candle opened, and its close was halfway of the body of this bearish candle. Okay, so you can see that it is halfway. So this is what we call the piercing line right here, this candle here. And then when you look at the chart, once again, you can see that, for example, here, you can see that this is a bearish candle, and the next candle is a bullish candle which closed halfway the body of this bearish candle, but it is not a piercing line because it should have opened below the what? The close of this previous bearish candle. So this is not a piercing line. Okay, so do not confuse them. We have a scenario whereby you can have this is a bearish candle, and then the bullish candle opens slightly lower than the close of that bearish candle, and then it closes at least halfway of the body of that candle. And then another scenario is, and this happens most in the market, is whereby you form this. The bullish candle does not engulf the body of the bearish candle, but it closes at least halfway, but it did not open lower than the close of this bearish candle. So this is not a piercing line. Okay, this is a piercing line. So we can spot it again. You can see that right here on this candle, we have a piercing line. You can see that this blue candle, which is a bullish candle, opened slightly lower. Okay, and then it closed almost at the close of this entire bearish candle, and therefore we got this move. Okay, we can also still spot it right here that we have this candle, blue candle is opening. You can see that it is slightly lower, and then it closed halfway the body of this bearish candle. Okay, but this is not a downtrend. So here, that one we don't consider it as a piercing line because it is not on a downtrend. It could be a short-term downtrend. So for example, here you can say this is a long bullish candle, but this subsequent candle which is coming next, it opened at a low which is lower than the close of this bearish candle, but it did not reach the half of the body of this bearish candle. So this is not also a piercing line. Okay, so here the piercing line we have is this one is confirmed. Okay, then we also have this one is also confirmed. Okay, so we have those two which are clear. So right here, this one would have been a piercing line if this was a clear downtrend. Okay, but you can see that we had already started a new uptrend, so you have to be more conservative. So where is the entry point and the exit point? So considering this piercing line here, candlestick pattern and bullish candlestick pattern, so we expect that we are coming from a downtrend, and therefore here we expect a big reversal within the market, or we expect the market to reverse the trend entirely. Okay, so what is going to happen? So what we do, we wait for a confirmation candle which is bullish. After the piercing line has been formed, wait for a confirmation candle, for example this clear bullish candle. So our entry point would have been around here, and then the stop loss is below the piercing line, and therefore we could catch this wave up. So one, you have to wait and see that it is that the trend in force is a downtrend. So we wait for a big bearish candle. After this big bearish candle, wait for a bullish candle that opens slightly lower than the close of that previous bearish candle, and then followed by a bullish candle which closes at least in the middle of this previous bearish candle. So we wait for a confirmation candle which should be bullish also, and therefore we make our entry point slightly above, and then we put our stop loss, and therefore we could catch the wave up. So thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this. My name is Jordan. Bye bye. I'll see you in the next video.